So I am Akia Shaw. I am the lead principal agent here at the Skye Group Atlanta, and founder of the company. And so many of you all have come in or have actually spoken to me probably many moons ago when it was probably just me back in 2018. And we have since grown the company quite a bit. And so some of you all have spoken to Jay or Manny, or maybe some of our other agents just throughout the years. And so we appreciate you coming back around. Some folks are new here, so I'll introduce myself. I am from Atlanta, born and raised here. It is probably a few of us that may be from Atlanta still, but most times we are running into a lot of individuals that's from other places, right? Atlanta is now a huge melting pot. And so we really love that. We love that a lot of people are relocating here. It's an incredible city. And even its outskirts is just an incredible place to grow and thrive here in the city of Atlanta. I have a daughter, so some of y'all have been around for a while where she was a little girl. She's now 17. She'll be 18 this year, headed to college. So we're doing all the things. So I always say, please keep me in prayer. Keep me in prayer. Keep the child in prayer. But she will be headed out to North Carolina. So here in the fall. So we are doing like 800 things at once, y'all. So my background is banking. I was a branch manager for about 12 years at several financial institutions. And then in 2018 went full time. Well, I'll say, let me go back. 2007 actually started investing in real estate. And so I was an investor first and then went straight into full-time real estate in 2018. And so in 2018, within 7 months, we sold 50 properties, and which is quite a bit of properties for a real estate agent. Most real estate agents only sell 4 properties a year, historically, just across the US. And so to sell 50 in 7 months was quite the accomplishment. And we have maintained that and doubled ever since that 2018 year. And so we typically do about 80 to 100 transactions a year. We do a lot of business. And so I always say there's probably nothing that I have not seen. I always state as well is that, I feel like real estate is forever changing. So the biggest part of real estate is the contract, not opening the house. Is actually the contract. That's how you protect the client's interest. And every single year, the contract actually changes. So the law changes of how to protect the clients. And so we consider ourselves, contract experts. My attorneys always say I'm a little attorney. I actually wanted to go to school for that and started with school to become an attorney. So I find interest in legal jargon. I think is exciting to me. And that is the biggest way to protect your interest is through negotiations, and everything has to be in writing. So you have to properly put it down and have to make sure you read the contract and all the things. So we enjoy that, outside of course, finding you the perfect property, but those two things have to meet and have to match. So we have a full operations team here with the Skye Group. Just as you're literally going through the process, you'll meet different partners within our company that will assist with just making the process very smooth. So that way you're not forgetting anything. We're keeping up with contract dates and timelines. Whenever you have a legally bound contract, everything is very time sensitive. So we want to make sure that you don't forget anything. So we make sure that you really hold your hand. We hold your hand throughout the entire process. So you'll see that you'll meet new people just throughout the time frame. And I'll introduce you, of course, throughout that entire process. So this is the home buying process from beginning to end. It looks a little lengthy, but honestly, this process moves very quick. So this is the part where we're going to take some notes, okay? So we're going to go through the entire process of the home buying process, but also the lending portion. And the lending portion is the biggest part. So I do want to go back a little bit about that. So y'all know that my background is banking. And so because we do so much business, a lot of lenders will always reach out to us and ask for our business naturally, right? Well, what we found is that they could not handle, one, our volume, but two, a lot of our clients utilize down payment assistance. And so what we've noticed over the years is that a lot of lenders hate down payment assistance. It's a lot of work. Typically, it's a ton of paperwork, and the margin for return on down payment assistance is very low. So most people don't want to do it. In fact, they consider that charity work. So whenever you're doing charity, you typically don't do it the entire year. You have bits and pieces here and there, right? And so most of our clients, they needed it, right? They needed it, they desired it. And so for me, it was important to pair with people that understood it. So ultimately, it didn't happen. So I found myself helping those individuals to just close. So we found that they just couldn't handle the pressure, couldn't handle our clientele. So we literally went back about 3 years ago, and I reinstated my NMLS license because I was like, man, why am I helping the lenders get to the destination? And it took forever, right? It's like I can just move you out the way and do it myself. And so I did. So about 3 years ago, I went back and reinstated my NMLS and started it back up. And so now everything is in-house. It's a one-stop shop. We used to have fallout. We used to have some fallout with the lenders as well. Now that is no longer a conversation. All of our clients close. Because it also gives me the insight, right? It allows me to look at your entire profile. It allows me to see where an underwriter might have a question or two. It allows us to go ahead and properly plan so that we can mitigate risk early on prior to you getting deep into the process and then a surprise happens. So we're going to go through how to avoid surprises and how to avoid something that's very detrimental in the process that you'll hear people talk about was stressful or, things of that nature. We don't want that for you. We want it to be very smooth. And so it's important that, you take notes during this process so that you're aware once you actually start shopping of how to hit the ground running. Okay. So the very first step is selecting a real estate agent. And of course, the next step is obtaining financial pre-approval. So most of you all have already sent over or have already completed the loan application. If you have not completed the loan app, please do so at your earliest convenience. I always have a question, like people always ask me, Akia, how much can I go out and shop for? And I won't know that answer, right? Like we don't know the answer until you actually do a application. It is not just about your pay stub. It is a layered approach. So I'm looking at several things at one time. I'm looking at loan to value. I'm looking at debt to income. I'm looking at your credit history. Just because a product allows for your debt to income to go up to say 56.7 does not mean that your personal profile allows that. And so every single person is totally different when it comes to financing. And so, if you hear something online, I love and hate social media because one, it does provide exposure, but sometimes it's loud and wrong. And so every single person's, situation is just different, right? So I have to put your file together for your unique situation, and then I'll let you know what products is available for you because every product also has different criteria. I'll let what you can afford, and what your interest rate is. We get a lot of questions around interest rate. Again, that is based on every individual's profile. So we'll get to more of that a little bit later. After you get your financial pre-approval, you'll need to analyze your needs in a buyer consultation, which is what we're doing now. Many of you have already signed the buyer brokerage agreement that allows for us or for myself and my company to work on your behalf. So in the state of Georgia, it is a requirement before you even go out and actually see a home for you to be signed on as a buyer client. There is a difference between a buyer client and a buyer customer. A customer only is able to receive what we consider ministerial duties. So very high level things that you would find on a Zillow, a Realtor.com, a Redfin, that type of information is what we can ultimately repeat back to you. Advice, like if we are providing advice for your specific situation, you have to be a client in the state of Georgia. And so a buyer brokerage agreement allows for us to work on your behalf as a client relationship. So you all, most of you all have already signed that. If you have not, I don't mind answering any questions that you may have. It also discusses commission. So for us, we require a 3% commission. Every agent is totally different. Most times the seller is paying for the entire commission. If they are not paying for the entire commission, then we will come back to the client prior to even going under contract and stating, hey, this particular seller is only paying 2.5% or 2.25% or 2.75%. Whatever the difference is of the three and the percentage that the seller is contributing, is the buyer's responsibility at closing. So that will be a part of your closing costs. Okay. So we'll, of course, discuss numbers. Every house is different. So we wouldn't know what the seller is providing until we actually communicate with the seller's agent. But it's a negotiation. So normally once we're, doing the negotiation part, you tell me which house, then we begin negotiating. We've been pretty successful in making sure that we get our full commission. It is very rare that we don't. So I'll say that. But if we don't, again, communication is key. After the buyer brokerage is signed, that is when we begin to work because now we are signed to do work. So we will begin to send you properties. So whenever we start to send you properties, we will go out and actually view homes as well. So we typically go out and see between 6 to 8 homes at a time. The reason that we do that, we do not like seeing one house here, one house there. That's like piecing things together. We always want to make sure that the client has options, right? And that you're not rushed into a decision. And so in order to do that, you have to see multiple homes. And so, however, on the in the same breath, we also don't see 20 and 30 homes. That is extremely counterproductive. If a person is seeing 20 to 30 homes, we have noticed in history that they become extremely overwhelmed. They have no clue of what they saw in the beginning. They forgot, exactly what it was. And also they're indecisive. They have no clue of, what the direction is. And so in this entire process, you will hear me say, we are very intentional. So we are very intentional with our process. And we make sure that we hit the bullseye the first time. So most of our clients are literally selecting a property with the first tour. If a home happens to go under contract while we're out shopping, which happens all the time because everybody else is shopping as well, then we will go out a second time. So we're normally going on 2 tours, seeing between 6 to 8 homes per tour. So maybe a max of 16 homes. Okay. And so we're going out, seeing those properties, and then we're analyzing. You'll fall in love with the house. We'll write an offer to purchase that particular property, and then we'll begin to negotiate terms with the seller. Once the seller and the buyer has agreed to terms, we will then be on what's considered a legally bound contract. So we would have an executed contract. I'll always slow down because I do want to make sure that all parties are aware that this is a very serious process. This means that all parties can be a party of suit. So I can be sued, you can be sued, the seller can be sued as well as the seller's agent. So it is extremely important that we take heed to the contract jargon that's embedded in the contract, which, we do, as well as our attorneys. And also that we are paying attention to the expiration times that's embedded in the contract. So we'll, again, assist you in that process. Now, after you go under contract, there's a few things that happen. So we're going to discuss 3 out-of-pocket expenses. So what should you save? The question is, what should I have? How much money should I have? So we're about to discuss 3 out-of-pocket expenses. So 3 things that you need to prepare for before even going out to shop. And then 3 protective clauses, 3 things that will also protect your funds, protect your interest in this entire process. Okay. So the very first out-of-pocket expense is earnest money. So many of you all have heard me talk about earnest money. Earnest money is utilized as liquidated damages to the seller. So now that we're in this legally bound contract, the seller's expectation is for you to perform and or close on the home. And so if you do not close on the home and you default on the contract for no good reason whatsoever, then the seller is due liquidated damages because you were supposed to close. So always keep in mind that in this process, the buyer is responsible for the entire purchase process. If the seller happens to give us time to do so, or happens to give us an ability to get financing or what have you, that is extra. That's a layer on top of what we're actually doing, right? But it is the buyer's full responsibility to figure out how they will close within this designated time. Okay, whether it be cash, whether it be financing, various forms of financing, it is the buyer's responsibility. So earnest money is typically estimated at 1% of the total purchase price. So if the home is $300,000, then you'll be putting down $3,000 up front, 1%. Now that number is negotiable. Some down payment assistance programs only require a full injection from the buyer of $1,500. So sometimes if we're using a down payment assistance program that requires a lower requirement, then I may negotiate that lower amount. But if the home it has multiple offers on it, if the seller comes back and says, hey, I require 1%, then I would want you all to expect to just make sure you have that saved is that 1% up front. Okay. You may not use it, but you definitely want to prepare for it. So that's 1%. So earnest money is your first out of pocket cost. So it's utilized as liquidated damages to the seller. Okay. So that's your first out of pocket. We got two more to go through. So earnest money is typically going to be turned in during your first protective clause. So your first protective clause is called due diligence. So in the state of Georgia, we give buyers a due diligence period. It is a negotiable time where the buyer can actually go out and have an inspection done during this time. But the due diligence actually gives the buyer a opportunity to walk away for any reason during this time frame, right? So it could be anywhere from 3 days. More than not is typically 5 to 7 days is what we normally put on our contract. But again, this is a negotiable time frame. So this is something that we negotiate with the seller. Sometimes a seller will come back and say, hey, we have multiple offers. You got to reduce your due diligence period. And that's fine. So we do have inspectors as well that will be done during this due diligence period. So that is your second out of pocket expense. The second out of pocket expense is your inspection. So the inspector is there to tell you what's going on with the property. If something is wrong with the home, then we need to know during the due diligence period so that we can have enough time to negotiate those repairs or concerns with the seller. So let's say we have a 5-day due diligence period. What you don't want to do is order your inspection on day 4. That's not enough time for me to get the report back and then create what's considered an amendment to address concerns. So it's an amendment, it's a document that we put all of the repair requests on, and then we send it over to the seller. We have to have time to do that, right? And we have to have time for the seller and I to converse about the repairs. So sometimes we're asking about like, hey, we need you to replace the roof. We need you to replace the HVAC system. We need you to replace. We normally are shooting for large ticket items. And then if there are no large ticket items, then we go to cosmetic. But we always, unless cosmetic is large ticket, right? But we typically are shooting for structural concerns, things that will make your life terrible, right? Like when you move in, it's just whatever. What we never want is for you to move into a problem. And so we always want to make sure that the seller is addressing any major concern before you even move in. But if it's something like, oh, I just don't like the paint color, that's cosmetic, right? Versus the roof falling off or the HVAC system being inoperable. Those are big ticket items that can, stop you from being able to live your everyday life. So we'll address those concerns first. All right. So that is your second out of pocket cost. It typically costs about $450. If you are on a basement or if you're on a crawl space, if there's any additional items or ancillary spaces on the land, like maybe a pool house, or if there is a pool, if there's a separate building that's on your lot, it may increase your actual inspection cost because, of course, there's more to inspect. If the square footage is larger than just a typical single family, so if it's over 4,500 square feet, it may increase in price as well. But that is normal, right? So about 450 is what I would write down for your second out of pocket expense. All right. And then your very last out of pocket expense is the appraisal cost. So the appraisal is about 675, $675. The same rule applies. So if it's a larger footprint, then the appraisal can increase in price. Okay, so 675. So I want to recap: earnest money, 1% of the total purchase price. So if the home, this is just an estimate, if the home is 300,000, $3,000. Inspection cost is about 450, and then your appraisal cost is 675. So there is a difference between the inspection and the appraisal. A lot of people mix those two words up. So the inspection is there to tell you what's going on with the home, what's wrong with the home. The appraisal is there to make sure you don't overpay for the property. So a lot of people might assume like, well, on Zillow's Z estimate said this, that, and the third. We hate Zillow because it's always wrong and they're always being sued about that Z estimate. So that is not what the home is worth. It's also not worth what the client paid for the property. So that is a bad practice as well. If you're like, oh, well, they only paid $200,000 for the house. That does not matter. Your value is based on the current market. So what will the current market pay for this particular type of property? And so it is based on like kind properties within a 1 mile radius. So also nothing that's 10 miles away, right? So the appraiser is always looking within a 1 mile radius of a like kind property. So if it's 4 bedrooms, we wouldn't be looking at a 1 bedroom or a 10 bedroom. We'll be looking around 3 to 4 bedrooms. Or possibly 3 to 5 bedrooms, just depending on square footage as well. So that is what the appraiser does. It is a non-biased person or unbiased person that has to go through an appraisal desk system. So no one can be at the property when they go out. We can't influence price, none of that, right? And so if a person asks Akia, I feel like, I'm overpaying for the property, that is a feeling. It is not a fact. It is a feeling, right? So everything is based on the actual appraisal. And what I will tell you is that a lender will not pay a penny more than what the home is actually worth. And so if the home does not appraise, this is another protective clause for you. So if the home doesn't appraise, then we will go back to the seller and say, hey, seller, we agreed to buy the home at 300,000. And so we need you to reduce it because it came in at 299. So we'll go back to the seller and we'll actually have them reduce it. If the seller then has the ability to say yay or nay, yes, I'll reduce it, or no, I won't. If they reduce it, then you do have to stay with the deal. If they do not reduce it, then you can walk away with your earnest money. Okay. So that is a second protective clause for you. So we had due diligence where, and I always use this example with due diligence. Let's say you say, Akia, every day that I go to my house, I want the sky to be orange. And then you go out to the house and the sky is blue. And you said, Kia, the sky is blue today. I said every day it has to be orange. And I say, okay, well, we're still within our due diligence period, so we can terminate. You can walk away with earnest money during that time as long as it's within the due diligence period, which is also why you want to get your inspection done, because if the seller does not agree to address the concerns like the major repairs, then again, we can walk away with earnest money. But you want to do it during that designated time frame. So you have due diligence as one of your protective clauses. You have the appraisal contingency as a protective clause. And the very last protective clause is the financing contingency. So the financing contingency allows for you, if you're actually doing a loan, it allows for you to have so many days to get a full approval or a full denial. So I always tell clients the most important thing in the world during this time frame is to have top of mind if a lender or myself asks you for any sort of documentation, that you have that turned in almost immediate, right? So if not same day, the very next morning, the document should be in the inbox. And the reason I say that is that, remember, we're a bank. So we're only on business on banking hours. And so every single day at 4 o'clock, the day is over, right? And so now we're on the next processing day. So everybody works different times just throughout the day, which we completely understand. But just note that that means that the next day you got to have that document in, because what you don't want to do is have multiple days of processing pass you and then your file is never sent to underwriting. If you don't get a full approval in the designated time frame, we cannot close on time, and you will be in default on the contract, and you'll lose your earnest money. So I don't know about y'all, but $2,000 and $3,000 is a lot of money. So we want to make sure that we're protecting your interest, and the only way to do that is by one, communication. Communication is super, super key. Even if you can't get it in or if you don't understand what we're asking of you, please call me. Please let me know. I'm gonna be on you though, so don't worry about it. But I am gonna be like, hey, I need that. I need that bank statement. I need that pay stub. I need you to write a letter of explanation. Like, I'm going to communicate with you like all the time during this process. We're going to become best friends, trust me. But I'll communicate with you quite a bit because I want to make sure that you reach the finish line. All right. So I want to recap one more time. Out of pocket costs: earnest money 1%, inspection costs 675. I'm sorry, 450. Inspection is 450, and then appraisal is 675. Okay, so earnest money, inspection, appraisal. You don't order appraisals, the bank orders the appraisal. So you don't have to worry about that. Now, you do order the inspection. So we have preferred inspectors that we've been dealing with for over 8 years. Let me tell y'all, every inspector is not equal. So if you get somebody that's too cheap, they are going to provide you with the worst report. Trust me. I've told my clients this over the years, and they didn't think that fat meat was greasy. And so they went out. I remember one time a client of mine, and she's a repeat client. She just wanted to help. One of her friends had become an inspector, and she's like, I just want to give them some business, blah, blah. I was like, you sure? Because, this your house. This is an asset. And she's like, yeah, I'm just going to give them some business. So she gave them some business, and y'all, her basement flooded after because we had a bad inspector. So you do not want to cheap out on these inspectors. If they miss something, especially those that are not licensed, bonded, and insured that you can sue, you have no remedy, right? And so now you're stuck with a problem, and you shouldn't be. I can only speak to what I see on that inspection report, right? So it is super critical that the inspection report or the inspector is very thorough. And it's also critical that they have warranties on their work, because if they don't, then we have no recourse, right? Like, if they miss something, what do we do? So I have to go back, right? So, sometimes the larger companies may have a warranty where if they miss something for like, it could be something small, and we'll go back, and this is very rare, but we'll go back and say, hey, you missed this. And they'll actually go out and either repair that item or completely replace it because they have warranties in place. That's who you want. Especially with a house, because houses, like, when something goes wrong on a house, it could be big, right? So our job here is to make sure that before you even move in, we are mitigating risk, that we are taking all of the surprises off of the table so that you're not walking into a money pit. And so that's our goal, right? So we have two well, actually three, I'm sorry, three inspection companies that we'll send over to you once we go under contract. So you don't have to worry about trying to figure it out. We literally, here at the Skye Group, we're a one-stop shop. So you don't have to figure out lending, you don't have to figure out your inspection company, you don't have to figure out the appraisal. All of that is handled for you. You just have to be financially prepared, right? So we will send that over to you. Okay, so your protective clauses, we spoke about the due diligence period. We spoke about the appraisal contingency. And then we also spoke about the financing contingency lightly. So I mentioned that you definitely wanted to get your documents in a timely manner, because if we get a decline, God forbid, if we got a decline, let's say that I normally negotiate 21 days on a financing contingency that gives us that amount of time. But if we happen to get a decline on day 20 of 21, then we can walk away with earnest money. But if we get a decline on day 22 of 21, then we are stuck. and the seller could actually walk away with your earnest money. So every day counts. Every single day. I mean, it is super critical that you get this stuff in. I can't stress it enough. But you definitely want to be Johnny on the spot. The best clients are those that are literally, like, most people are on their phone. It just depends on your job, right? But I have a lot of teachers, I have truck drivers, I have doctors, I have a lot of nurses. Like, my folks work, right? In order for you to get a house, you have to be employed. And so the excuse of not being able to get to a document, it just doesn't live here, to be quite honest, because everyone is busy all day and we still have to reach the goal, right? Like, we still have to protect your interests. So however I can help, let me know. I'm big on jumping on a phone call and jumping on with the IRS, jumping on with student loans, I can help with your bank statements, things like that. Like, use me, use who you got, right? So that we can get to the destination. We do not mind. Okay. All right. So I want to go through this process down here that is important. And this is the lending process. So this illustrates the entire loan process once you go through. So we're going to pull credit. So most of you all have already completed your application. In order for me to put your file together, I'm normally using a soft pull. So if you've done the application, it was a soft pull that was already done. It was not a hard pull on the credit. In order for me to get a pre-approval letter, I have to do a hard pull on credit. So a lot of my clients right now are on our credit repair program. So if you're on our credit repair program, I will not be doing a hard pull until you're out of credit repair. Okay, so I've only done a soft pull on credit. So you will not have a hard pull. You won't see that. For those of you all that are not on our credit repair program, if you have a pre-approval letter in your inbox, that means that we've already pulled, right? It is important that credit is pulled closer to the time frame that you're going out to shop, because credit expires. So we don't, again, things come up on credit that we don't want to see, but we can keep that same credit report for 60 days. After that, I have to pull the credit all over again. So I don't go around just pulling. And there's a charge for credit typically. So we don't want to just keep pulling credit. We want to make sure that it's exactly where we want it to be before we pull. So typically your credit is only pulled one time, just one time. Okay. However, we do get notifications if you go out and open a loan or if you open a credit card. We are notified from all three bureaus that you have just opened something, and then we have to pull again. So please, during this time, do not apply for any loans at all. No loans, no cars, no nothing. I'm gonna go through like our 10 commandments in a moment, but credit is pulled. Also, you go through underwriting. So underwriting, you'll go through underwriting about 3 times. So first, in order to get a pre-approval letter that allows you to go out and actually shop for a home, I have to send you or run you through an automated underwriting system, AUS, which is typically through a system called DU or LP. So I'm running you through that system so that we can get a pre-approval. And then we go out and shop. So that's the first thing, is the first underwriting. The second underwriting is after you find a house, then we go back to a actual human being and they underwrite it based on the product that you're utilizing. So they'll actually look at your file, they'll look at the guideline, and they'll put the two together and make sure that all the boxes check. They may have several questions which are considered conditions. So they will then come back and say, yeah, Dorothy or Tiffany is approved for a loan, but it is contingent on these items or these questions being answered. Those are considered conditions. So you will then have what's considered a conditional approval. So we then have to we'll come back to you and say, hey, Lauren, we need you to answer questions 1, 2, and 3. And we're going to help you with that. Trust me, I'm going to hold your hand still even through that part and tell you exactly what I need in order to get to the destination. So don't fear. You don't have to think of it all on your own. We're going to help you. So then we go back to the underwriter for clearance. So then we're going to send all of those conditions to the underwriter. They're going to clear the file and then we're going to close on the home. Okay. So also during this process, the appraisal will be done. It will be ordered. So we'll ask you to go ahead and pay that 675 so that the appraiser can go out to the home and make sure that the value is there in the property. In the state of Georgia, a survey is not a requirement. So some of my clients desire to add a fence on their property or just honestly desire to see what their property line is. You can do that, but it is a third party cost. It is not a requirement of the loan. Okay. Also, remember that your mortgage is comprised of principal, interest, taxes, and insurance. So, whenever we're talking about mortgage payment, I'm talking about those. It's really five things because it's in hazard insurance and there's mortgage insurance. It's two different insurances. So the hazard insurance covers like the things of the home. It's almost like car insurance, right? So if you get hail damage or if somebody like hurts the like runs into the house or something like that, that's your hazard insurance, your homeowner's insurance. And then you have mortgage insurance that protects the loan. If you have a loan, conventional FHA, the mortgage insurance is on there. So you have two insurances. You have, and the one insurance that you can shop for is the hazard insurance. So you do want to get quotes, Progressive, Allstate, whoever you currently have insurance through, you want to ask them if you can bundle. That typically saves on monthly payment. But just remember that your mortgage is comprised of principal, interest, taxes, and insurance. So if that insurance is sky high, your mortgage is going to be sky high. So you do not want to go out and get some elaborate policy right now during this process. You can do it later, but it also goes towards your debt to income ratio. So I will tell you exactly how much I have allotted for your insurance. And sometimes it's like $125 a month. And I'll come back and I'll say, hey, Tara, we cannot go over $125 a month. So when you're shopping, just let your insurance rep know that. Okay. If we go over that amount, then your monthly payment could increase, which then increases your debt to income ratio. And it could cause us to not be approved anymore. So we do want to shop around. And I'll tell you when to do that. We have insurance reps also that we've been working with that understands what we're trying to do. So if you need a referral, we will provide that to you once we go under contract. We have three different agencies that we'll send over to you. So again, one-stop shop. Okay. So once your loan process is cleared, well, I would say simultaneously as we're clearing everything, Georgia is an attorney state. We're not a title. Some states are title states, but we're actually an attorney state, and the attorney will pull title and clear title. So they will be doing that while we're doing the loan. And so they'll go ahead and ensure that there's no liens on the property. They'll remove any encumbrances, and they'll ensure that once you move into the property, that is clear of any sort of concern from the previous owner. Okay. So there's also a thing I want to mention called owner's title insurance. So I quote that on every fee sheet that I give out is owner's title insurance. Is super important because if something is missed by the attorney, it could have been something that was in dispute that was not public record. And then it came back to the property, right? So remember that as the owner of the home, you are responsible for everything that comes with the home. So if there is a lien on the property and it wasn't public knowledge when they ran title, it wasn't on title, and it just came back at some point during your ownership. Owner's title insurance is kind of like a gap insurance policy, and it'll protect you from somebody else's liens. So you can then, your owner's title insurance will kick in and it'll pay off whatever that concern is. So you never want to remove owner's title insurance. It is a one-time fee and it lasts for the life of ownership, not just the life of the loan, but the life of ownership. So it's really important as a protective item. A lot of people in the past, like back in the day, used to lose their homes because there wasn't owner's title insurance that was even established, and liens would pop up randomly. So then they established this policy, and now people are not losing their home for somebody else's liens. Okay, but once your financing is clear, the title is clear, you'll obtain funds for closing, close on the property, and then you'll take possession of the home. So what is the difference between a pre-qual and a pre-approval? So some of you all might have gone through this process with other lenders before and they gave you a pre-qual. We hate pre-quals. Pre-qual is very high level. It means that you just did an application, but no documentation was actually turned in. That is too risky, right? Anytime you do an application, we have to back it because you could be calculating your income incorrectly from what we know how to calculate. Guideline, every product has a different way to calculate income. So you might have put something in the application when in reality we weren't able to use it. So we do not give pre-qualifications. We do not shop on pre-qualifications. We only shop on pre-approvals. So once you turn in documentation, that's when we have a full file and we can then issue a pre-approval letter and you can confidently go out to shop. Okay. So you have to turn in documents. I cannot stress that enough. If you all have not turned in documentation, you've only completed the app, it is not done, right? So you definitely want to go ahead and turn in your documents, even if you don't have it all. Like turn in what you have. And I say that a lot, especially with those that are on the credit repair program. Remember that you have a 48-hour window to complete everything in order to keep your slot, y'all. We have our a lot of y'all don't know who are not on the program, but we actually did a gift back, which is and our 8th year. This is our 8th year anniversary. And so I went back and I was like, man, how could I really give back to the folks that I've been talking to for years? Like, what has stopped my clients from being able to purchase? And the one thing was credit. And so we went back and I am literally paying for credit repair, and it is thousands of dollars to pay, just being honest. So I am paying per person to actually get their credit repaired, but I only got so much money. And so once it is out, y'all, it's out. And so we have been able to help a ton of people. I mean, most of our clients are seeing a 200 point jump and they're out, they're closing. We have another closing coming up on Tuesday. Like we're really closing the gap, and that is the goal. Like I really want to assist our community with closing the gap of home ownership, and that was the way. But I will tell you, we have a wait list, okay? And so we had to put a time frame on for everything to be completed. We're giving everybody 48 hours to get 3 steps done. And so one of the steps is one, completing the loan application, but two, turning in the documents. So if you have not turned in your docs, please do so, or at least show intent of doing so, or communicate with us. Communicate. Y'all gonna hear me say it all day. Communication, 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 so that you can keep your slot. Because if not, somebody is waiting to take your slot and they're like, hey, I'm ready. So but please make sure that you get everything done so that you can keep your slot. Even if you're not closing right now, we're still making sure that your specific slot is secured. Okay. All right. So moving on. So I also get the question of, Akia, how much should I have to expect for closing? And it's actually comprised of two things, believe it or not. So we always kind of group the word together and we'll say closing costs, but it's actually comprised of both down payment and closing costs. Those are two separate things. So the down payment is dependent upon the product that you're using, whether it's FHA, USDA, VA, or conventional. So each product has its own requirement of how much you have to put down on the home. So, they want to make sure as a lender that you have some skin in the game. And it's the same thing with like writing an offer and turning in earnest money. The seller wants to make sure you have some skin in the game, right? And so the lender is looking at the same thing. So there are like FHA requires 3.5% down. Conventional normally requires 5%, but we do have some 3% conventional products as well. USDA is 0 down, and then VA, as long as you have not utilized your entitlement, it is 0 down as well. So those are your 0 down products. But that is just down payment. That is not closing costs. So even if you have a VA loan, there's still closing costs that we have to account for. So the closing costs are your attorney fees. Your closing costs is also remember that that principal, interest, taxes, and insurance that I talked about. So the taxes and insurance is what you've probably heard of as your escrow account. So that is your escrow. So that escrow account to pay your taxes every month for you and to pay your insurance for you, you have to fund it. You have to put money into it. And so that's also a part of your closing costs. If there is a cost for the rate, so, folks talk about like what is the interest rates for today or what have you. So, one, rates change every single day. Rates are based on the market. So wherever the market is for that time frame is what the rate is. But it's also based on your individual profile. So Dorothy's rate will not cost the same. It's about the cost of the rate. Dorothy's rate will not cost the same as Tiffany's rate or Lauren's rate or Tara's rate. Everybody has their own individual rate sheet, okay? And it's going to be based on your credit score. It's going to be based on your loan to value. It is going to be based on just various things, how many months of reserves you may have, like various, what we're looking at is the risk factor, and that will determine the cost for the rate, not the rate itself. So if you go around and say, hey, what are the rates right now? That's the wrong question, right? Because that part doesn't matter what the rate is. It's really about what is your specific rate and what is the cost for that rate. So just imagine having a rate sheet and it goes from 5% to 8%. So it'll go from 5%, then 5.125, it'll go to 5.250, 5.5, and so on and so on, right? So every single rate has a cost associated with the rate until you get to the par rate. So the par rate is where there's no cost. Is where it zeroes out, and that's typically a higher rate. But let's say a 5.875 for Lauren, he has a 700 credit score. His rate is $5,000, right? Well, unfortunately, we have, a Kia that has a 400 score. My cost for that 5.875 that Lauren has is now $20,000 instead of 5,000 because of my credit score. Okay. And so everybody's rate is different. So you never want to compare yourself to the next person because your profile probably looks completely different. Even one extra thing on credit could change your entire rate sheet, and it changes every day. You cannot lock a rate until you are actually under contract. So once you go under contract, then you can lock the rate. I will also tell you that because of anytime that something happens in the world, right? So anytime there is new administration, anytime there's a war, anytime that something happens, the rates can, or the cost for the rate can increase. So you do want to be cognizant of that. The other issue is you can't chase that. We never know when a natural disaster happens. Like we never know, right? And so I would say when you're ready, you need to pull the trigger. Pull the trigger so that you can lock it in so that it doesn't keep changing on you. But that is a part of your closing costs. So closing costs is estimated at about 2 to 5%. So I like to just say 3% is a good number. For closing costs, this is something that we typically try to negotiate with the seller. So we try to get the seller to contribute to the closing costs. So there is a terrible assumption out here that a seller must contribute to a buyer's closing costs. That is far from the truth. That is a gift. And that is why we call it concessions. So we can negotiate. We are expert negotiators. We do a real good job on getting a lot of money for our clients. But I do want to set the expectation that it is not a requirement for a seller to do anything. If they provide us with something, we are saying thank you, like appreciate you, right? Because it's honestly the buyer's responsibility to carry the entire transaction. However, whenever I am putting your profile together, I know exactly how much I need from the seller. Like, and that's the benefit of me being a lender also, is that I know exactly what my negotiation needs to be in order to get and make sure that you're comfortable with your out-of-pocket costs as well. And so I go straight for the jugular every single time, and I'm doggone good at it. And so I typically do pretty good in getting what we need. And so, but I just want to set the expectation. They don't have to give you anything. So you just want to save every dollar during this time frame because especially like new construction may not give you a whole lot of money. And also new construction might require a elevated amount of earnest money to be put down. So that is something that you definitely want to consider. Sometimes you have way more leverage with resale, and it could be a house that was maybe a year old. Um, but you have just more leverage, right? Sometimes it depends on the builder. But we'll let you know once we kind of get out there and start shopping. So the neighborhood. So I get questions around, how's the crime? How's the schools? Things like that. Unfortunately, we are restricted from speaking about crime, school ratings, things of that nature, per National Associations of Realtors as well as GREC, Georgia Real Estate Commission, because utilizing or answering those questions could be considered steering. So we could steer a person in one direction or another, which is actually illegal for us as realtors. So what we can provide is resources so that you can get those questions answered. And we can also tell you what we cover, what areas we cover. So we have actually expanded this map quite a bit, because the more Atlanta, and whenever I'm saying Atlanta, y'all, I'm talking about 13 major counties. But the more Atlanta becomes unaffordable, the more people are actually expanding out into what was at one point considered a rural area, that is now deemed a suburb. So I'll kind of go through this a bit, but let's talk about average price point right now. So in Atlanta, based on Atlanta Realtors Association and looking at, again, 13 major counties, the average price point in Atlanta is $521,000. Okay. 521,000. So whenever you think in your head, what is average? If you think of an average thing, right? Think of 521,000. That is a $500,000 home. Okay. So for those of you all that have lived in Atlanta for a very long time, for those of you all that may be repeat buyers in Atlanta, and you might have bought years ago, just know that that same house that you bought years ago at 200,000, that was a beautiful home, is now 500,000. Okay. So that's how it works. That's the beauty also of real estate, is that the home that you bought at 200,000 that you'll just pay every month on for say 2-3 years could accrue in value and in a few years be worth $500,000, and you can walk away with $300,000 in your pocket just from paying your normal mortgage that never increased every single month. That is how you get to wealth. That is why all of your top people, your Warren Buffetts and all of the folks always will tell you that real estate is the number one tool for wealth. And it is because you can still pay a set amount every single month that doesn't change. If you're renting, it's going to change. Most of y'all have felt that, right? Where your lease amount changes at renewal time. And so every single year, it will change. You now have to adjust. Even if your paycheck doesn't adjust, you now have to adjust to this new change. Well, the beautiful part about your mortgage is it is a fixed rate mortgage, right? And so that is something that can provide you with some confidence, but it also accrues in equity. So the equity is the difference from the value of the home. So whatever the home is worth at that time, minus what your loan amount is. So what you owe on the home, that is your equity. So that gap is your equity. And a lot of people use that equity to do like a home equity line of credit, where they'll renovate their homes, they'll go and open businesses, send their kids to school, like just so many things, because that is your money. That is, that's the funds that you can actually tap into and even buy other homes, buy more, begin to invest. And so, back in the day, people used to stay at home for 30 years, right? Now that is no longer the conversation. Most people are actually historically staying in homes 1 to 3 years because they now know the game. They now know how to utilize their asset as an asset now and not as a liability, and to take those funds, put it into another property or put a tenant into the home and begin to build wealth through real estate. And so as an investor, that's what I do. Like I make sure that I teach my clients how to invest and how to make good decisions when it comes to it. So most of my clients are actually repeat clients. Most of them are buying multiple properties because they now know the game, and that initial anxiety is out the roof. Like we're done with it, right? So after you do it one time, you're like, oh, that wasn't so bad. It was only 30 days, right? In 30 days, y'all, you're gonna feel like a little pressure because it's 30 days. It goes quick. But let's be real. We're already in March in 2026, right? So look how fast that came and went. So you can imagine how fast 30 days goes. So we'll teach you that. We'll teach you how to get comfortable in it so that you can begin to build wealth without having to go and get another job, right? We want to work hard, work smarter, not harder. And one way is through real estate. So this map illustrates the major areas that we cover. We also, for those of you all that's looking for a more economical option for like a Gwinnett, like Gwinnett and Cobb are typically, even I would say Forsyth, but these are typically your more your higher end areas, right? So or your more affluent areas. And so yes, you can find some little pockets like in Powder Springs and Austell that may be a little bit more affordable, or Snellville, back here, possibly going into the Loganville area. But if you go right outside of it, a lot of people are going right to the back end of it. So if you go right outside of it and go to like Walton County that backs Gwinnett, you may be able to have more bang for the buck. Below Rockdale is Covington, Henry County. So I don't know what is in Henry County right now, but I am selling all the houses in Henry County. But also, if you go below Henry County, if you're okay with that, if maybe you're a remote worker, you can look into Butts County, which is Jackson, Georgia. Below Fayette and Henry, we have Griffin, which is Spalding County. But behind Douglas, we have Carroll County. So back in the day, Paulden, like Dallas, like just a few years ago. I'm not even saying like back in the day, but like maybe 4 years ago. I remember selling houses in Dallas, and I was like, I need y'all to don't don't sleep on Dallas because it's behind Hiram. And I was like, listen, I'm telling you, it's about to blow up, and I be doggone, it blew up. So all of my clients that moved to Dallas is happy, happy, happy because they have hundreds of thousands of equity right now, and just in a couple of years because Dallas is blown up. Um, so these are the areas that we primarily cover on day to day. We go to Macon, we go to Bonaire, Perry, so your middle Georgia areas, anywhere that makes sense, we will go. But these are our stumping grounds every single day. So home inspection. So just a recap of what the inspector will look at. So they'll look at the appliances, the plumbing, the electrical, the HVAC, the ventilation, roof and attic, foundation, and then just the general structure. Your home inspector cannot pass or fail a property. All they can do is advise, or let you know what concerns them with the property. We also have a general contractor, so a licensed GC on our team, that if we run into these issues, we can get a second opinion. So we'll also send it over to them. If you need anything added to your home, or I mean, he literally builds properties, his team, from the ground up, and so he'll go out and confirm any sort of suspicion that the inspector might have had, and that way we can again properly negotiate on your behalf. Okay. So adhering to the plan, anytime we go under contract, you will get what's considered a congratulatory email, and it'll have all of the dates that are all of the important expiration dates on the email. So we'll send that over to you, but we'll also send calendar invites. So if it is not on the calendar, y'all, it never happened. So everything has to be scheduled, and we put it on the calendar to just make sure that all parties are aware of the expiration. All right, so this is the big part. This is the part that I want you all to really focus on, because this is the deal breaker, or could be the deal breaker of your loan. So remember, if you are not a cash buyer, you're getting a loan. So this is important, okay? So number one, these are the 10 commandments when applying for a real estate loan. So number one, thou shalt not change jobs, become self-employed, or quit your job during this time. So if you hate your boss, hate them for 30 more days, because we cannot change jobs in between time. The worst thing that you can also do is go from W-2 to 1099 or contractor or self-employed. And so I know that a lot of people want to run their own businesses, but let me give you a bit of perspective, okay? So remember that we're dealing with a bank, and banks are very intelligent folks, right? So they look at trends. They look at trends all the time. And the fact is that most businesses fail within the first 3 years, right? And so they look at that because they want to make sure that if you are going from a W-2 that is typically a more stable employment to self-employed, that you have already gone through the ebbs and flows of business ownership. Normally, also, even if you switch over, most businesses do not show a profit until year 2 and 3. Okay. So if you are self-employed, if you, and I have a lot of owner operators that are truck drivers. If that is you, then we have to use tax returns. So I'm always going to ask for 2 years of tax returns. And for those of you all that write everything off, that doesn't work when you're buying a home. So you could have done it for the previous years, but in the year that you decide to buy a home, you have to show that you are bringing in income. That is the only way that we're able to create a budget for you. So let's discuss that. Like, let's talk through it. We do have some alternative loan options like bank statement loans, P&L loans. But whenever you hear alternative, that also means higher risk. Alternative financing, sorry. Whenever we have alternative financing, it's a higher risk product. So that means that you have to put more down. So the absolute minimum down on a higher risk product is 10%. So you have to put down 10% on a bank statement loan or a P&L loan. So let's say if it's a $400,000 home, that's $40,000 minimum for, remember, that's just the down payment. That does not include the closing costs. So, if we need that, we can talk about it. Some of our clients desire that, to be quite honest, because I have a lot of owners, a lot of entrepreneurs that make great money, but they just have no desire to deal with taxes right now. So, we can discuss that because that is an option that can move you a little bit quicker. And also know that if you are utilizing those types of products, you have to have a minimum 680 credit score as well. So the credit score has to be higher, as well as we have to have more down, more cash readily accessible. So again, don't quit your job if you are thinking about it, because I did have a conversation with someone that was interested in changing employers, but it was the same line of work and it would still be W-2. Let's talk about it because that might be okay. I just need to hear what the plan is. Number two, thou shalt not charge cards excessively or allow your accounts to fall behind. I want to paint a picture real quick. So let's say you have a credit card and the minimum balance, the minimum monthly balance that you have to pay on the credit card is $25. Not what you normally pay. You might normally pay $100 on it, but I'm talking about the minimum monthly is 25, right? So let's say you miss it and you forget to pay it. Something happens and now you have a late on your credit report. So remember that we are strangers. So the lender and the buyer are two strangers. The underwriter will never talk to you ever. I'll talk to you on behalf of the underwriter. My processor will talk to you on behalf of the underwriter, but you'll never actually speak to the underwriter. So we're having to paint a picture to the underwriter that you're the most incredible person in the world. And the only way that we can do that is by going off of how you handle debt. So we're looking at your credit report. So if you show that you missed a $25 payment, right? You missed a $25 payment and you are trying to get a loan that's $2,500 a month, right? For your house. We're going to say, I don't know about this, right? Because you couldn't handle a $25 credit card and you want a $2,500 mortgage. So I say all that to say, during this time, even if we are fixing your credit, do not run into a situation where you are adding on chaos, right? So make sure that you are staying on top of your due dates, put it on your calendar, make a reminder, what have you. Because if we're seeing negatives, or even if we're in processing and we constantly are seeing negatives, we will stop the process. So we want you to take control of your process as well. Like we need you to meet us halfway, right? But we got to make it make sense. We can't show that we can't afford $25 when we're looking for $2,500. And that is what the underwriter is always looking at is, again, they're assessing risk. Okay. So I hope that makes sense. Number three, thou shalt not spend money you have set aside for closing. I always use this story. I had a client back in the day that went to the Versace store right before closing. I guess it was birthday or something. and went crazy, spent all her money at the store and did not have any of the closing costs. So she had to take everything back. We are not celebrating early. I get clients all the time. It's like a Kia, I'm running up. It's about to be a Easter sale, or it's going to be, 4th of July sale. Can I go and buy a refrigerator? Can I go and buy this, that, buy that? I will always say no. And the reason that I'm saying no is because we're not done. So we haven't balanced your file. Everything is an estimate until we get to the final numbers, right? Until the attorney balances your file. So you have to be really careful with overspending. Like, this should be the tightest time, the most disciplined time that you have ever had in your life, for real, whenever you're buying a house. So just make sure that you do not overspend, because you just never know. You never know if maybe something appears and now we got to pay off a credit card or something, like you just don't know. So be very tight, be very conservative during this time frame. Don't spend money. Number 4, thou shalt not omit debts or liabilities from your loan application. So if there is something that we don't see, we normally will see it at some point in time. So if you go out, and that kind of goes to my next one, if you go out and you buy a car, we get notified of that. We get notified of everything. So please, I beg of you, do not buy a car before you buy a house. I've had a client, I remember one client of mine, she was on her last leg with this car, y'all, and we knew it. She told me. She was very honest, and I appreciated the honesty. And she's like, Kia, I gotta hurry up and find a house because this car is on its last leg. And I'd be doggone if the car clunked out on her like the week before closing. Unfortunately, she could not go and buy a car, because if she bought a car, it would ruin her debt to income ratio. Remember, cars go towards the debt to income ratio. Many of you all have cars that have no car payment attached to it. So if you go out and get a car, now I'm adding that to your DTI, and it could mess me up. Or not only could it mess me up, but it could reduce your overall purchase power, right? Because you might can afford it, but on our end, we have to stop at a certain number when it comes to your debt to income ratio. So you always want to get the house first. That's the asset. As soon as you drive off the lot, the car is already depreciated. That's the liability. So we want to make sure that you are purchasing the asset first, and then you go and get a liability after. You can literally go that Monday, if we close on Friday, and go and buy a car, but not right now. I have a lot of clients that have to go and rent a car. You got to go rent, because if I see a car note, I could be messed up, right? Like, we could be back in square one, and now you got to go back and rent. So just be careful with that. Goes to number 5, thou shalt not buy a car, truck, or van, or you may be living in it. Number 6, thou shalt not buy furniture. Don't buy furniture during this time. Same thing that I mentioned before. We're not celebrating early. We're not doing it prematurely. We want to get all the way through the process, and then we begin to acquire things. Unless you just have a ton of like cash that I don't know about. But don't go and buy it. Number 7, thou shalt not get any new credit cards. I remember I had one of my clients. He was an elder. He went out and he was just getting some tires, and he didn't know that they were having him apply for a loan. Be careful with that, because again, y'all, your credit is so sensitive that one pull can drop your points significantly depending on how many inquiries you have. So remember also, the cost for your rate is depending on your credit score, and it's in buckets. So if we're like at a 620, and with like a 620, 640, 660, and so on and so on, right? So let's say you have a 620, and then you go and pull your credit, and now it drops to a 618. Now your cost for your rate went from 5,000 to 10,000 because you dropped by 2 points. So you want to be careful. Like, do not touch your credit during this time at all. Do not open new lines of credit unless we tell you, because sometimes we need to build credit again. But we will literally tell you every step. If you go outside of our steps, and you know more than we do, you sold more than 500 homes, you've done all the things, right? Then by me, all means, like, run with it, right? But when it comes to credit, when it comes to actually getting people in houses, closing on deals, I'm telling you, I know exactly what we're looking for, and I can help you, but you have to do exactly like what we are trying to help you to get to. You have to follow those steps. So no credit, like no credit pools at all. Thou shall not get new credit cards. Thou shall also not co-sign for anyone. So some of my clients might say, oh, I don't want to purchase until, August, but they know that they have a child going to college and they have to complete a FAFSA form and open up a Parent Plus loan. Okay. So if you are doing that, that is a loan and that goes towards your debt to income ratio. So that means that you might not have until August. You might need to do something now because that just expedited your time frame. Because if we see those Parent Plus loans hit, then that again goes towards your debt to income ratio. So if that is you, like, let's talk about it. Let's try to create a plan so that we can properly assess and get you in the home when we need to get you in the home. Okay. So no co-signing. That is a co-sign when you do a Parent Plus loan. Thou should not make large deposits without first checking with your loan officer. So I have a lot of clients also that have money in shoe boxes at home. They have money in safes at home. Cool with me. I don't mind that. Just know that we're dealing with a bank and banks are looking for money laundering. So you cannot just randomly drop $10,000 into a checking account that hasn't been sitting there. So every dollar has to be what's considered seasoned funds. It has to be sitting there for a set amount of time. If not, it needs to be considered a gift. So even if you are getting gift funds from, even let's say that you have a spouse and the spouse is not on the loan, that is considered, if y'all are not on a joint account, then him or her giving you money is considered gift funds. So that has to be sourced. So if that is going to happen, or if you have your mom or parents or whoever giving you money, let's talk about it because I'm going to tell you how to properly do it. I want to say this loud and clear. Do not drop that money in your account. Do not drop any random gift money, even if it's from a spouse that is not on your account. Do not drop that money on your account. There is a proper way to do it to where we can use the funds. I will tell you, but you got to tell me what the plan is and that you're expecting gift funds. So I'll tell you how to do it. But please do not put it in your account. All right. Number 10, thou shalt not change banks. If you change banks, then we don't have history. We don't have bank statements. And a lot of these banks are pulling credit these days. So no changing of banks until we're done with the process. All right, so making an offer. Whenever an offer is made on a property, there are one of three things that can happen. The seller could either accept the offer as is, reject the offer, or counter the offer. So they can come back and say, hey, instead of us closing on the 25th, I need to close on the 27th. Or instead of earnest money being 1,500, we need 2,000. So any change from the original contract that was sent over is considered a counter offer. We're not mad at counter offers. We actually like them because that means that the seller is actually showing some interest in our offer and they like our offer to a degree, right? Like it just might be a couple changes. So we're not mad at that. Now, one thing that I also want to point out is the move-in date. So a lot of clients right now, especially due to the economy, they may need some extra days in the property because it's a few things that always happens. One, they don't want to uproot their lives and not know if you can truly close or not, right? So they might say, hey, I need 2 days after closing to get out the house. We can close on the 25th, but you can't take possession until the 27th. So that's an option. Sometimes also they need the funds, right? Like they need to sell the property in order to hire movers and things of that nature. So again, they might need, the actual proceeds from the sale in order to get out of the home. If any of that happens to where they need additional time, we will always know ahead of time. It won't be one of those situations where we're getting down to the last minute and we're just finding out that they're needing more time in the property. Also, depending on how much time, we typically charge the seller for staying in your home, and you get those proceeds for staying in your home per day. And so we'll discuss that if it should happen. Closing 101. So you do want to have two forms of ID. So a driver's license, passport, some sort of primary form, and then a secondary ID as well, like a social card or a credit card or something of that nature. We will also, like with earnest money and with closing costs, if it is over $1,000, you have to wire the funds. In the state of Georgia, there's a law, but you do have to wire the funds, and you'll be typically wiring them to the attorney. So the attorney will send you wire instructions and through a encrypted email, just to prevent wire fraud as well. So if you get something from us, that is not from us. Okay, that's fraud. It has to come directly from the attorney, and we will tell you who the attorney is so that you can call them, verify that it was them, verify their instructions before you're sending cash over. Okay. Deed. So you will also get a copy of your deed. Once you close, a lot of third party companies will begin to solicit business and say, hey, you can get a copy of your deed for like $75. You will actually get a free copy from the attorney. So you don't have to worry about paying for a copy of your deed. Some frequently asked questions. How will I tell you about the newest homes available? So I will always tell you about properties within your price point, within your designated area. Remember, we are extremely intentional. And so we don't go just, we're not just lollygagging, dilly dallying, right? Is what everybody's saying now. So we're not just dilly dallying around. We are literally hitting the bullseye every single time. So if it's not within that designated area, we'll come back and we'll say, hey, I think you may want to expand your search and expand it to these areas, and then we will expand, but not without communication. Will I inform you about all of the real estate companies or just our company? Every single person. So whenever we send properties, it is based on two major platforms, which is FMLS and Georgia MLS. And we also have some off-market opportunities as well, that we'll put in front of you. But it's not broker specific. So we will send you every house that's on the market. I hate third party sites because they're not always updated. So your Zillow, your Redfin, your realtor.com, those are not the most reliable sites because they don't always update their sites with recent information. Our sites are the main portals, and then those sites pull from our portals. So we don't know how often they pull. So sometimes you can see a house that sold 5 years ago and it might say it's available and it's not even on the market. So if you want to search around and just kind of see what's out there, use our site because our site is directly connected to FMLS and Georgia MLS. So you can go to skygroup.atl.com. You can build, your search criteria. You can set it up on auto and it'll send you properties all the time. Okay. And also stay away from those calculators that's on there because it does not show your specific cost for your profile. So if you have a house and you need numbers, I can send that to you once we start the process. Okay. Can I help you with new construction? Absolutely. We do it all the time. I have quite a few relationships all over with new construction developers. One thing about new construction, just so that you're aware, is that they sell at dirt. So you could be riding by a neighborhood and the flag will be waving outside saying starting in the low 300s. You go inside and you're like, okay, I love this house. How much is it? And they say 500,000. You're like, wait a second, the flag said 300 outside. The reason for that is they sell at dirt. So every 3 to 5 homes that sold, the price increases because now they have a new comp. So just kind of, know that it's also an investment strategy. Some people use it. They'll buy at the beginning of, a construction and then sell at the end. But it is something that, you know, there's probably a reason why I didn't send it to you. And it's probably because the flag is no longer valid. It's just a marketing technique, to get you to come inside and then you find out the real price. Also, if you happen to do that, if you happen to go in and have a conversation, which is fine, just let them know that you are represented. If you do not tell them that, you will be responsible for the entire commission because they will not add us back onto the contract. And you should not be signing any contracts at all, even if you go to an open house. Never sign a contract because we need to look at it and we need to protect your interests in that process. So send it over to me. Let them know that you have representation. Okay. For sale by owner. So how does for sale by owner work? So typically a person doesn't, now the for sale by owner industry is very low. Most people are not selling their homes anymore because they've realized that they are pricing it incorrectly. So they are like getting, lowball, honestly. But if you do find something that isn't for sale by owner, let me talk to them because we need to discuss commission. That is the biggest part of why people want to sell their own homes is because they don't want to pay commission. So we are typically very successful in that as well, because it's normally just one side instead of two. So let me know who that is, and we'll speak to them. Can I go back to the property again once an offer is made, but prior to possession? The answer is yes, but there are certain times. So I want to pause here a little bit and say that just remember, if it doesn't matter if it's resale or new construction, it is somebody else's home, right? So whether it's a corporation or a personal owner, that is their property, and we cannot just walk into somebody else's home when we desire to. So everything has to be scheduled. And we have to be on time. We cannot be late to our appointments because typically they may have multiple appointments or just not be available. Some people work from home. So we do want to be respectful of their time as well. So we can go back through the property during that due diligence period. So during your inspection, we also have a final walkthrough. So we will go back through the property prior to acquiring the home because we also want to make sure that there hasn't been any damage, during the time that they were moving out or just in general, right? We want to make sure we've had situations with other colleagues of ours where homes have burnt down, where there's squatters in the property, things of that nature. So before you sign on the dotted line, we're going back through that property to make sure that it's in the condition that we agreed to purchase it in. So we will go back through that property. All right, so I want to recap on funding. So we have FHA, which is the most commonly utilized product. It gives more flexibility when it comes to credit score and down payment. So typically you need a 580 credit score, but it doesn't always get you an approval at a 580. It's just the minimum. And then your down payment amount is 3.5%. VA is zero down unless you've used your entitlement before. And it's not like you didn't sell the home, you still have the home. So, but VA is zero down. Conventional is typically a higher down payment product, and it also is a stricter loan product. So you have to have a higher credit score to even be entertained with conventional. But we do have some 3% products as well as 5% is the normal amount down. And then USDA is for the rural areas. So those that are in the outskirts that have, and I want to be certain that like Macon, Warner Robin is not deemed rural because they're actually going off a population count. It can't be more than 3,000 people. But those are considered rural areas, and those are zero down products. With USDA also, it is based on household income and household size. So it is a restrictive product as well. You can't make a ton of money utilizing a USDA product. Down payment assistance. We have a ton of down payment assistance products, but we do not offer all of them because a lot of times they have restrictions attached to them. And I say we don't offer all of them. We don't offer, sometimes I get questions of, hey, what are all your down payment assistance products? And I always meet the question with, well, I need to see your profile because your profile may not qualify for all of the programs. So everyone that you qualify for, we'll talk about for sure. I love down payment assistance. That's why a lot of my colleagues, they also send their clients over to me for financing. But I have mainly all of the products that's out there. So we can assist. Sometimes they're good, sometimes they're not. It's never free money, right? Like there's always something attached to it that has to happen. Most of these programs also require that you have at least 3 years of tax returns. So if you show a loss on your taxes and it's an FHA loan, I have to hit your debt to income ratio with that loss. So I have been seeing a lot of Schedule C's out here that's like $20,000 and $30,000 losses. That doesn't work. So, again, if it's that type of situation, we have in-house products that are down payment assistance as well that may not require tax returns. So I literally will I got to see the whole file in order to know what you will qualify for. But we have some of everything, so I'll let you know what products is best for you, and I'll send you a fee sheet, and then you can determine which option you want to go with. Okay. Out of pocket, just one last time on the recap: earnest money, inspection, appraisal, and then miscellaneous fees could be utilities to set up for your utilities. Okay. Moving checklist, you'll receive this 7 days prior to closing. So, and if you all have not completed the job form, please take a picture of the screen. I'm gonna give you like a minute here to take a picture. This is that job form I was telling you about that gives us information in regards to the property that you're desiring. So I need you to be as detailed as possible on what type of property you want. Sometimes you all are searching on our sites and you found some homes, send those to us. Like you can text it to us. We could also see it in our system, which properties if you save them. But you can send those over to us just so that we can make sure that we're aligned with the vision. Okay. Everybody got it? Hope so. If not, Jay has texted you all the job form, so you can just click on the link and it'll go straight there. All right, skipping past that. All right, so we are at the end, y'all. I'm 4 minutes over. I'm gonna be probably a few more minutes, but this is the end. So I always ask the question of how does a person win with you and how does a person lose with you? But because of time, I'm not gonna go through every person. We have a bigger group today. And so most clients, most times when I ask that question, the answer is, you know, they want someone trustworthy. They want someone that listens to their needs. They want someone that communicates, that's available, things of that nature, right? So that's typically what we hear. And then I always ask, like, what do you feel like you have the right to expect from a real estate professional? And then what do I have the right to expect from you as the client? Because it's a two-way street, right? So we give, and then you also have a responsibility as a buyer as well. And that responsibility is actually on both sides is on that buyer agreement. So it does state that you have to communicate. That's a big one, especially those that are in the credit repair program. If you go ghost on us, we will stop the process and we'll put somebody else in your slot. Okay. So communicate, communicate, communicate. We're all adults. We just need a little communication. Because we can't assume things. So we want to make sure that like we don't want to, you know, try to read your mind and get it wrong. So make sure that you're communicating with us. If we're texting, please try like timeliness on responding because a lot of times we may need codes. If we're in the middle of negotiating a deal, I need some direction on what you would want me to do, how to act on your behalf. We don't make the final decision, you do, right? So we need your participation. We need to know your thoughts. Don't be afraid to communicate with us. That's the only way that we'll know how to protect you in the process. So please, 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 that is number one for me is communication. And I'm gonna go through just while we're here, go through some of our requirements. So that is one, communication. Communication and comprehension go hand in hand, right? Because we can talk all day, but if you're not understanding what I'm saying, it went in one ear and out the other. So if you don't understand it, tell me that. Like, let me know so that I can say it a different way or try to break it down a different way. I need you to be comfortable in this process. The only way that people feel rushed is when they don't understand something. And so it is important that we communicate effectively so that you can comprehend effectively. So let me know, like say, okay, I don't know what you just said. Like what, right? And I'll say it again a different way, or I'll bring a third party in so that you can get it. But I want you to get it and I want you to feel comfortable in the process. We are not transactional agents. So there are transactional agents that's out there. There's plenty of them. It's your open doors and you know your different processes, your Zillows, things like that. Those are transactional folks. We are relational agents, and so we're not rushing after a transaction. That's just not I've never been like that. I care about the relationship. That's what's important to me. Most of our business comes from repeat clients or referral. And we like it like that because that shows that we are putting out good business and we want to make sure that we continue that way. And we also don't connect with everyone. We don't accept everyone as clients. We love our little knit of clients because we want to give you our absolute all, right? And That's just the relationship that we want. So communication is important. Comprehension is great. Flexibility in this space is important. Remember, every single person has a job. I currently have 267 clients right now. And so it is super important that we all know that we're all busy. We are all busy, but it cannot be the excuse for communication or turning documents in and things of that nature, or even going to see a house. So what we have done is we've helped out just a little bit, right? So back in the day, I want to say prior to COVID, we started doing virtual tours. So a lot of our clients would be at work and a house would pop up, and by the evening, the house was gone. It was under contract. So we started allowing virtual tours, and they loved it because it gave us the opportunity to still put an offer on the home and then bank on the due diligence period to where if you went out after the fact, you didn't like the house, you can still pull out with earnest money. But what we don't want to happen is that because of work schedules and things of that nature, that you're missing out on opportunities. So a lot of people will utilize the virtual touring service if they can't get out. So that's where kind of like that example of flexibility pops in. Also, just not waiting until like the days of saying I can only see homes on Saturdays doesn't really work. Properties move too quick, and it could be another 5 months before another home like that comes back on the market, if ever, right? So we need a little bit of flexibility on time, on also being able to get things in. That's it. Personalities, right? So we also desire to connect with good people. We are not giving back to the people that are like habitual perpetrators in credit, like those that just desire to have everything go into the negative. That's not who we're doing this for. We're doing this for the people that had a hard year or a hard 2 years, something like that, right? And they're just trying to get back to normal. We're doing it for those that, are just great individuals. So I say that to say, if you wake up every day and you are angry with the world, I'm probably not the agent for you. We don't want any negative Nancy's, negative Neds. I don't know if y'all have been on social media sometimes and folks just be angry, like they're just angry at the world. We're not your agent. So we can refer you to someone that has a little bit more flexibility and time in that. But we want good folks. Like we want to be happy. We want you to be happy throughout the process. And it's a purpose behind this. This is not just a transaction. Like there is a purpose and passion that's behind our process, and we put God in everything. So if you're not a believer, that's fine, but we are, and so we want to make sure that we are doing good work, that we are putting good seed in the ground, and that it is flourishing, it shows fruit. And we're closing the gap. Like, so that's our goal in life. And don't forget, turn in your docs, complete that loan application. It's a soft pull on credit initially. But also if you're already past that part, we should probably be going out shopping at this point. A lot of people are coming out of credit, so we'll be calling you soon to go out and start shopping. All right, good people, it's a beautiful day. It's a beautiful day. It is a lot of pollen outside. So if you're like me, please take your allergy medicine. It had me all down last week. I was out for the count. But please go and enjoy it. Again, I look forward to working with each and every one of you all. If you have any questions, any concerns, anything at all, don't hesitate to reach out to me. But I will talk to you all soon. Have a good day. Happy Saturday.